Hello, Marc from ADM Investor Services International. I thought this week I'd take a change of tack and start to look at some of the things which may change as we recover from the COVID-19 um, virus. It is a process which I assume will be very, very long and much longer than people assume. It's also a process which I think will actually see some very dramatic changes as a consequence of what's happened and what's been revealed about the global economy. So I'd like to start off in a more traditional place. My first table is of global market implied policy rates. It's interesting, I think, above all, from the fact that basically, if you look at the 3-year column, so we're talking about a long, long way out in relative terms. Basically, other than a very few countries, such as Brazil, for example, we're not really seeing much in the way of an increase or a recovery in global interest rates, which means global interest rates are going to remain low for a long time. There's two ways of looking at that. The first one is that it's going to be cheap to finance all sorts of projects, both for governments and for the private sector. On the other hand, it does imply also a fairly grim global outlook, which remains extraordinarily uncertain. My second chart or table today, or chart rather, is the IMF's April global economic outlook. We have already had some hints from the IMF that they're likely to revise this down, but back in April, and we're only obviously in the middle of May, and they're already talking about revising it down. They were basically suggesting that we were looking at a total cumulative loss in terms of global GDP of around $9 trillion. Obviously, very large. To put it on a comparison scale, that's roughly about 45% of total US GDP. That's actual GDP in dollars. So I think this is important because it does actually imply we need quite a lot of stimulus, which responds to the changes that we're going to have as we go forward. So my third table, I think, is starting to look at some of the areas which may be impacted, and this is going to be part of an ongoing series. So this week I'm just going to look at a couple of things and how they may impact. The third table or third chart is from IATA, the International Air Travel Association, and is the projections for air traffic, or RPKs, revenue passenger kilometers, in the next 3 years. And I think the most notable aspect of this is, as much as they are looking at a similar sort of trajectory for global GDP, they don't expect air passenger traffic to increase at nearly the same sort of pace, and assume that it won't recover to prior levels before 2023. That is obviously very, very significant, because basically it means a fairly big hit to both the airline industry and to the tourism industry. And as with businesses, it probably means that people are going to be staying at home more. It also implies, I think, it makes a very valid assumption that until we actually have a vaccine for COVID-19, a lot of people are going to be very wary about going on long distance travel. My fourth table is, or my fourth chart is, or rather is a map of global air or European air pollution, comparing January to March. As we can see, dramatic drop. And I think this is going to be very much a very big key part of what happens as we go forward. We're going to see less oil demand, we're going to see shortened supply chains, and we're going to see very dramatic changes to the way that we do business. And the recovery is going to be a lot greener, and implying a lot of dramatic changes for the global economy. I will explore this theme in future videos.